Hi, this is the Chapter 2 problem assigned for homework. So this is the information. You have direct labor costs, $42,000. Total manufacturing overhead is $75,600. These are the various T accounts with missing information. The students were provided a template. However, this is the information in the book, and for homework I changed the utilities, factory utilities, to $50,000. So unfortunately, some of my students changed the template back to $5,000 and completed the project or completed the problem with using the $5,000 versus the $50,000 as I had intended for them to do. So this video will be based on solving the problem based on the $50,000 factory utilities. Okay, so the first requirement of our problem to solve for homework was calculate the predetermined overhead rate. Well, we remember that we cannot identify all costs associated with a product or service immediately or in real time. So we make an estimate, and that estimate is based on, for this case, the direct labor cost. So given the problem, you had the information, which was $75,600 divided by $42,000, your direct labor. This is the equation in the information given in the problem. So the overhead rate is 180%. So the next requirement is to solve for the missing items in all of the T accounts. So if we just look at raw materials, it has a beginning balance, purchases, and ending balance. So from accounting 1 or from any exercise that you've done with T accounts, you should be able to decide what your missing number as far as what raw materials have been assigned during the current period. Okay, so that is just taking D8 plus D9, which is your beginning, plus your purchases, less your ending inventory. So you have a credit in raw materials of $76,500. So $76,500 has been assigned in the current period to products that are in the process. Okay, so to determine what is in work in process inventory, I have left the T account for raw materials up. And I'm going to click on this comment, so maybe you can see the comment. It might be outside your window, but I'm going to pull it over. So the work in progress, solve for debits first, direct materials, applied overhead, and then solve for the credit. So here we have direct materials. We need to solve for direct materials. Here is the equation for direct materials. Beginning raw materials inventory plus raw material purchases less indirect, which is down below in the T account for manufacturing overhead. It was given in our problem, less ending raw materials, which we have. So it's direct materials used in production. That is your formula. So given that information, we want to insert that information as far as the 10,000 plus the 85 less a $10,000 indirect materials less the ending balance in raw materials, which is $18,500. So direct materials used in the current period is $66,500. We also need to apply the overhead rate. So if you can see that comment, use your predetermined overhead percentage by the direct labor above, which is 35,000. So that's your 180 times your 35,000. So we've solved for the debits. Now we can solve for the credits. If you have that information, you can have the 30,000, the 66, plus the 35 plus the 63 less the 20. So that gives you work in progress inventory of $174,500, which then also flows over to finished goods inventory, because this is the raw materials. You use them during the processing phase of your current accounting period. Now these materials, or this product is finished, it's going to be sent over to the finished goods T account, inventory account, and then applied manufacturing overhead will also flow over to manufacturing overhead T account. So we'll see those in just a minute. Okay, so I'm still showing the work in progress inventory, but I'm trying to show you where the $174,500 comes over to finished goods. So you would put that information, and then you would be able to solve for the finished goods inventory. So that was pulled out of finished goods inventory and put in cost of goods sold, because that's one of the products that we sold, and they gave us the revenue, the sales revenue of $280,000. So you would put that information then into the cost of goods sold. So then you would go back to the work in progress inventory and take your applied overhead and say, okay, so now I know what my actual costs are. This is how I applied it. This is the information that I changed, even though some of my students did not solve the problem with the current amount here. So given this information with the $50,000, that actual overhead could be calculated at $119,000, which then says that we have under applied, and I don't know that you can see this unless I scroll down just a little bit to get it in the picture. We have under applied manufacturing overhead of $56,000, which then would go to cost of goods sold, because it's an adjustment to cost of goods sold. Therefore, you would have adjusted cost of goods sold for $250,500. So we solved for our T accounts. We also have an adjustment to manufacturing overhead under applied of $56,000 if you use the data that I changed the problem from. So here we need to compile the cost of goods manufactured report. So this would come directly from your T accounts. You would just pull over the information. So here was the $10,000 beginning raw materials inventory. Our purchases, our indirect was given to us in the problem as well, and then our ending. And so we have direct materials used in production. We bring over our $35,000 for direct labor. And then we have manufacturing overhead is the 63, which was our applied overhead. Then we have total current manufacturing cost. Then we would have the beginning work in process, which was given. Then we would have the total in process, $194,500. Then we would have our ending inventory, which was the $20,000. And here we have cost of goods manufactured is $174, and this ties back to your T account. Hi, just to show you that work in process inventory, the $174 goes to finished goods, so that is your goods manufactured during the current period. Therefore, I said it ties back to your T account, and it does. And you can see where it goes from work in progress to finished goods. The last requirement of this problem was your income statement. Your sales revenue was given to you in the T account for revenue, $280,000. Now just pull over from your T account's cost of goods sold, your $60,000. Your cost of goods manufactured came from the report you just finished in requirement number 4. The total was $174,500. Your finished goods T account, Then you can also verify with your T account that you had unadjusted cost of goods sold for $194. Here the students were to indicate whether it was over applied or under applied. Ours was under applied at $56,000. Then you would pull a total of $250,500, which ties back to your T account as well. Gross profit you should be able to calculate. Less selling and administrative expenses includes the $50,000 versus the $5,000 for utilities expense. And here we have a net loss from operations of $39,500. I hope this helps. Thank you.